The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
So joining us now to discuss those crypto markets is Mike Schwitalla. He is head of trading at asset manager and brokerage firm Crypto Finance AG. Welcome, Mike.
Good morning from Switzerland, Lawrence. Thank you for the invitation. I can't agree with you. So I think, it's more sellers than buyers, but it's more a consolidation. So it's a quiet market, let's say, and the macro narrative of the rising yields, I think it's expected. So it's more the market is fading. The people are losing interest. You see it. The media attention is fading. Google search interest is fading. But it's a normal market cycle. So let's say we're in the broader, let's say, range of 35,000 to 45,000. If we break up above, it would be a bullish sign, as a bullish trend again. If we're breaking below the level of 35,000, so we would see some sellers, especially if we have, let's say, the tail risks coming in, or the potential tail risks. Let's say a failure of the Ether merge, or an escalating conflict in the Ukraine, or even if Russia threatens Finland. So I think that's more the tail risk we have. Until now, it's just a consolidation.
Yeah, Mike, I don't think we're too far apart. But my question in all of this is that if sentiment is such a big factor in all of this versus some long-term fundamentals, and as we were discussing before, whether or not Bitcoin serves as an inflation hedge, is it fundamentally that case? Does the fact that it's so sentiment-driven, is that sort of a warning sign to the general market as to the underlying fundamentals might not be as strong as were suspected earlier? In other words, we have all these narratives of Bitcoin being this inflation hedge, of Bitcoin being an investment in certain aspects of things, and yet we are down.
So I don't see the fundamentals are strong. If you check every conference coming up, you see all the TradFi members joining the conferences. On TradFi conferences, you see crypto conferences, and you hear and see the institutional requests from the TradFi market. So the fundamentals are strong. It takes longer to get a product done for those TradFi players, because it's all about regulation. So we're still in an early stage from the regulatory point of view. It's all about that, but the fundamentals are strong. And let's say from the retail side, it's not like 2021, so you feel there's no FOMO anymore, but there is not such a big leverage anymore, so the market is not that fragile as in 2021 from my point of view to the downside. So it's a stable market. Maybe you can short some options, short volatility. It's an interesting market for sideways or market neutral strategies.
So Mike, who are the sellers, and what will be the catalyst to move a leg higher?
It's a broad selling. You can say it's a big selling. You see the volumes. The volumes are below average, so there are not really many sellers out there. So it's just normal market behavior. No big selling pressure. You don't see big clips selling. And you see even Bitcoin or even other currencies moving away from exchanges. So there's not a big selling at the moment. You see it in volumes.
Mike, you just briefly alluded to this idea of the failure of an ETH merge. How likely is that to happen, in your opinion? That seems like that would be a pretty big deal.
Yeah, it's the tail risk, so I think the probability is low, but the impact would be huge. So I think that's like a Tether failure event, the Ether failure event. It would be quite huge, especially when we're talking on the option side. All these option vaults, they have to hedge themselves somewhere with a proxy. So, and the proxy, let's say, is Ether and Bitcoin volatility. So I don't really know what happens then in the altcoin market.
It was interesting you said about a Tether failure. Do you see the likelihood of that? And maybe you can also talk about Luna. The Terra Luna, Luna Foundation Guard has been buying up a lot of Bitcoin, and yet we haven't seen the price of Bitcoin rise amid, this kind of sentiment. I wonder if you could explain your thoughts on why.
So I think the Tether failure story was a story from 2017 up to 2020. I think that's not really the main tail risk anymore. Especially you have other stable coins evolving, like the UST from Luna or USDC from Circle. So you have a stable coin, quite a stable coin environment already. Despite from the USDT ecosystem. From the Luna part, I'm not really into the project. But let's say I think it was up to 2.5 billion market volume in Bitcoin, and let's say we're trading much more on a daily basis, and you have futures and an evolving derivatives market. So I think this one-time player is not really the biggest move. If it gets traction from the FOMO side again, like last year from the MicroStrategy and the Twitter stories or Elon Musk stories, then we get traction. But if you have a market player buying huge amounts, and the retailers are not following, so I think you have no big market impact, and that's what we're seeing. So you have no traction on the retail side. They're not interested in the crypto anymore. If you talk to guys on the street, they're more interested in commodity prices at the moment and not Bitcoin. Last year it was the opposite story. So it was all about crypto, all about participating in the crypto market, and now it's all about hedging your gasoline costs.
So Mike, you were talking before about selling vols in this kind of a market. Nonetheless, is there any way you would, are there any positions you would take on, any options positions you would go long, such as you described, low delta potentials in ETH? Would you buy those low delta puts? Just as a,
I didn't check the market now for the wings, so especially on the downside in Ether, but that could be something as a tail hedge. I think it's still expensive, but it could be a tail hedge for a falling market. It will happen in Ether and the altcoins, so that could be a good hedge. It's expensive, but it could be a good hedge. And let's say at market or even butterfly shorting, also butterflies, you're doing vol strategies. So I think that could be an idea, but it's more for the enhanced investor, so advanced.
So it's a lottery ticket, if you will, is basically the way you're looking at that
ticket. Yeah, let's say yes. So it's a hedging strategy, pure hedging, not gambling.